Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking at oil on a lot of time frames here. We'll also check out USO and DWT. So oil is getting into a tightening range on the hourly time frame. I've got a support line at 48.58, and that is because the price has hit that point multiple times on multiple hourly candlesticks to the penny. So I put it there. We can see a lot of lower wicks bouncing off this level, and we then bounced 1 penny above it at 48.59 on Friday. So you can see we're getting tighter, a lower high pattern, clear horizontal base of support, a descending triangle here. And if we get a bear break of 48.58, lose that support, I'm looking at 48.43, and then a key level of 48.14. The bulls really want to hold 48.14 because if that level were to break, we made a really big, strong move to the upside from the low $47 range all the way up until the upper mid $48 range. So if we lose that consolidation low of 48.14, we didn't establish a ton of support on the way up here, so it could be a pretty easy 50-cent drop. So the bulls are still trying to fight and see this oversold bounce play out. And on the hourly time or on the daily time frame, it's really looking weak at this point. And the amount of the upside that the bulls saw compared to the downside, we didn't even take back the last bearish candlestick here, and we can see a big upper wick of profit taking, still maintaining some higher lows the past couple of days, but I would be very cautious of a bear flag where we could head right back down towards the lows if we get a bearish loss of that support just pointed out on the hourly time frame. So what the bulls are hoping for is something that happened in natural gas, and you can actually look at natural gas. I'm going to do the video here in just a minute, but on the daily time frame, we had those oversold conditions about a few weeks ago, and we saw a weak initial bounce attempt. We pulled back and formed the higher low, and that higher low is really what set the tone, because after that we got our higher high, and the bounce played out for a couple of weeks. If we cannot see a clear higher low established and a move back towards the recent high of 49.59, we will know the bears still have a ton of momentum here. So it's a bit of a tale of two time frames with all of these oil tickers and US oil itself, where the daily time frame, I would look at that and say, okay, that's a weak bounce attempt. I need to be cautious because the bears are in control. But if I look at the weekly time frame, it is a bullish reversal candlestick. So we need to be looking for the potential of the bulls to confirm this reversal candlestick. But I know looking at the details on the daily time frame a bit more zoomed in, that the bulls really have a lot of work to do. So we need to be cautious at this point. And if we don't see a solid green week next week confirming this reversal candlestick, we will be looking back down towards the lower $47 area where we did find support initially on the dump. So looking at USO on the daily time frame, it's the same thing where we have the oversold bounce underway. The RSI is under 30. And at this point, it is a weak bounce. We closed near the low on Friday. We're seeing volume decline, and that is going to indicate that a break is imminent in terms of an increase in volatility. And as of right now, if we see a break, I'm looking at 1029. A break of 1029 would be bearish on USO, and we'd be looking back down towards the lows. There's a gap at 1021, and then we dropped all the way to 1002 at the low. And resistance is the high of this bounce, 1043. So the goal for the bulls is to form a higher low compared to 1002, and then see a bull break of 1043 to get a little higher low and a higher high, indicating that this bounce still has momentum to the upside. Same scenario, I look at the daily time frame, that seems like a weak bounce attempt, but the weekly chart is a bullish reversal candlestick, and we're still in an uptrend on the weekly time frame. And let's actually draw this out right here, but we've got a higher low pattern from quite some time ago, and depending on where you start it is going to dictate how this trend line looks. But if we put it right there, that's a nice job of hitting these lows with bulls holding those dips. So watching this uptrend support line, and as long as we form a higher low compared to that recent pullback, the bulls will maintain a bull patterned since 2016, and that higher low level that I'm looking at is here at 956. Must be a higher low compared to that level. So far, so good for the bulls, but we must confirm that reversal candlestick. Looking at DWT, it's the exact opposite, where we have a big time breakout. Consolidation here, this looks normal and healthy. The bulls look still in control to me here. We're seeing the volume drop off, so that volume is going to spike either Monday or Tuesday, and that's going to indicate a little bit more volatility as we break that tightening oil range that we just looked at on the hourly. But I would look at this chart and I would say, okay, the bulls are seeing very healthy consolidation. They are still in control. So the key support is 28.70 the bulls want to hold. Resistance is 30.33 and then up to 32.32. But it's the same thing. So I look at this daily chart and see it looks really strong, but I look at the weekly chart and that's a very clear bearish reversal candlestick with a big upper wick of profit taking. So that has me cautious and saying, okay, need to be prepared that if we do break the low of current consolidation, 28.70, that we are likely to confirm that bearish reversal candlestick on the weekly time frame, indicating further consolidation is coming. So as of this point, we're watching the lows of recent consolidation for the bear oil plays and the highs of the bounce attempt so far for the bull oil plays. So it's going to be a very interesting start to the week to see how it plays out, and we should see a break of this hourly oil time frame before we get to the open on Monday morning. So we'll be watching this very closely. Bears still have momentum, but the bulls have that reversal candlestick on the weekly time frame. Hope you have a great rest of your weekend, and we'll see you with James on Monday.